Bismillahirrahmanirrahim. Today we will start with Chapter 9, Inventory Costing Methods and Capacity Analysis. Here we have in cost accountant has three choices to how to calculate inventory cost: absorption costing, the first choice or the first method; variable costing, the second choice or the second method; and throughput costing, the third method. Mainly, by default, we use absorption costing by default as the main costing method for calculating inventory cost. This method, we use it in accounting 1 and accounting 2. Mainly in financial accounting, for preparation of financial statements, we use absorption costing method. Variable costing is the cost method that used for internal purposes only and not permitted for preparation of financial statements according to IFRS and US GAAP. Throughput costing is less common than the other two methods. It's a method used for what we call it theory of constraints, and we will discuss it later. First, what is the differences between absorption costing, variable costing, throughput costing, and how we will use it? The comparison between these three methods, we will start with variable costing method. Is a method of inventory costing in which only variable manufacturing costs are included in inventoryable cost. What we mean by inventoryable cost, when we want to calculate or to measure the inventory cost according to variable costing, we use only variable costing elements. What are the variable costing elements? We have first direct materials, second direct labor, third variable manufacturing overhead. Then we will concentrate on manufacturing cost, but only the variable one. The variable manufacturing cost, as we discussed in chapter 2, cost terms, we have only the direct materials, direct labor, and variable manufacturing overhead. But absorption costing is a method of inventory costing in which all variable manufacturing and all fixed manufacturing costs are included as inventoryable cost. Then we have here fixed and variable manufacturing costs are considered inventoryable or product cost. Here we have only variable manufacturing. Then here we have direct materials, direct labor, variable manufacturing overhead, like variable costing, and fixed manufacturing overhead. Here in the absorption costing, the product cost or the inventoryable cost is including four elements. It's direct material, direct labor, variable manufacturing overhead, fixed manufacturing overhead. As you remember, direct labor and direct materials are always we consider it variable. Here you must remember that manufacturing cost, here we consider only the manufacturing costs as product or inventoryable cost. But the difference here is what manufacturing costs are considered as product cost. Here, only variable manufacturing. Here, all manufacturing, variable and fixed manufacturing manufacturing costs are considered inventoryable or product cost. Throughput costing, as we said, it's less common in use, but we have here only direct materials are inventoryable. Here we have only direct materials are inventoryable. Then direct materials are product costs and throughput costing, but the other costs are not inventoryable. Okay. This means that we want to concentrate on the manufacturing cost to calculate the inventory cost. As we said, according to IFRS and US GAAP, which will be used in preparation of financial statements, we use only absorption costing method. but variable costing method are not used. Here we will summarize what will be said. The difference between absorption costing and variable costing is how to use fixed manufacturing overhead. Fixed manufacturing overhead are considered product cost or inventoriable cost only in absorption costing method, but in variable costing method are not considered as product cost or inventoriable. If we don't consider a cost as product or inventoriable cost, we will consider it as period cost. Why? We have product and period cost. We have inventoriable and non-inventoriable, as we said in chapter 2 cost terms. Okay, if we don't consider a cost as product cost or inventoriable cost, we will consider it as non-inventoriable cost or period cost. If we don't consider a cost as inventoriable or product cost, we consider it as period or non-inventoriable. Then fixed cost here, according fixed manufacturing cost, fixed manufacturing overhead cost, we consider it product cost or inventoriable cost in absorption, but we don't consider it as product cost in variable. We consider it period cost here. But the main difference between absorption and variable costing methods is important, and will we discuss its effect on in the preparation of income statements, of preparation of income statement and balance sheet later in the example. This will affect the net income. This will affect the net income under absorption costing and variable costing. There is a difference in net income between absorption costing system and variable costing system, because this difference is related to how to use or how to measure inventory cost and which costs are considered as inventoriable. Here variable costing only consider direct materials, direct labor, variable overhead, but in absorption costing method, this method considers direct materials, direct labor, variable manufacturing overhead, and fixed manufacturing overhead as product cost. Okay, the difference between absorption and variable costing under both costing methods, selling and administrative expenses are treated as period cost, as we said, because it's non-manufacturing cost, non-manufacturing, non-inventoriable, and we will consider it as period cost. Here, companies may not use variable costing for external financial reporting because US GAAP and IFRS require that fixed manufacturing overhead be treated as product cost, as we said in the previous slides. Okay, in the next video, we will start with the first example to demonstrate the differences in calculating the per unit cost using absorption and variable costing methods, and in preparation of income statement using the two methods. Thank you.